Good morning, everybody. I hope you had a great weekend. Today is May 12th, 2025, and this is your Monday market update. Let's dive right in to what moved markets last week and what we're watching this week. On Monday, tariff talk returns. Buffett steps down. The week started with a stumble. Stocks pulled back after a strong multi-week run, snapping a 9-day winning streak. What rattled investors? President Trump reignited trade war anxieties, announcing a 100% tariff on any movies filmed outside the United States. Symbolic move, but one that reminded markets how quickly trade sentiment can shift. Meanwhile, Berkshire Hathaway shares dropped about 5% after Warren Buffett announced that he'd be stepping down by the end of the year. The message on Monday was simple. Uncertainty is back on the table. The Dow fell a quarter of 1%, S&P dropped about three quarters of 1%, and the Nasdaq slipped about a half of 1%. On Tuesday, weak data and weaker earnings as the selling pressure continued. Tuesday, we got a bigger than expected U.S. trade deficit, over $140 billion for March, which only amplified concerns about slowing global growth. Tech earnings didn't help. Palantir fell over 13% on weak guidance, and pressure across semiconductor and software weighed on the broader Nasdaq. Even solid ISM services data couldn't shake the gloom as inflationary component of that report raised eyebrows. Add it all up, and Tuesday felt like a risk-off reset. The Dow fell 1%, S&P lost three quarters of 1%, the Nasdaq was down three quarters of 1%. Wednesday brought the Fed meeting and press conference, and as the Fed holds steady, markets caught a breather midweek. The Fed stayed on hold as expected, but Chair Powell's comments were a bit more hawkish than markets had hoped, emphasizing both inflation risks and rising unemployment. That said, he did not slam the door on future rate cuts, which kept investors from panicking. Now, Disney was a bright spot, jumping up 11% on strong parks performance, while Google dropped over 7% after internal execs raised concerns about the AI-driven decline in traditional search traffic. Late-day rally did help stocks close in the green. The Dow gained three quarters of 1%, S&P rose a half of 1%, and the Nasdaq nudged up about a quarter of 1%. Thursday turned into a big day with the UK trade deal lifting markets and optimism. President Trump announced a limited trade agreement with the UK. Not a game changer yet, but enough to spark hopes that the broader tariff rollbacks might be on the horizon. The initial response and the read on things was a bigger bark than the bite turned out to be. Markets took it in stride. By the end of the day, semiconductors rallied on news the administration was rolling back AI chip restrictions. Tesla jumped on hopes that the tariffs on China might also be reduced. The market liked the direction, even if the details were still murky. The Dow climbed three quarters of 1%, S&P added about a half of 1%, and the Nasdaq led with a bit over three quarters of 1% gain. Friday brought markets to close a bit cautious into the weekend. Markets pulled back slightly Friday as investors awaited the outcome from the U.S.-China trade talks that happened over the weekend in Switzerland. More on that in just a moment. Initial optimism around a possible 50 to 60% reduction in Chinese import tariffs faded into the close. President Trump's buy stocks now comment turned heads, but traders weren't ready to jump in ahead of the weekend's uncertainty. Still, the week closed with cautious optimism hanging in the air. The Dow fell a quarter of 1%. S&P also dropped a quarter of 1%, and the Nasdaq was flat. For the week, the Dow was down about a quarter of 1%. S&P down about a half of 1%. The Nasdaq down a third of 1%. Not a dramatic pullback, but the markets did hit pause, digesting some mixed earnings, more balanced Fed, and the return of tariff headlines. Let's look ahead. Inflation, retail sales, Fed speak, and then, of course, China and the White House. Aside from that, here's what we're watching this week. Tuesday brings April's consumer price index, the CPI. That's the big one. If inflation stays hot, the Fed may keep waiting. If it cools, the case for rate cuts gets stronger. I do think the CPI and again tomorrow, the day after's PPI are stale, so I don't see much there. But also on Tuesday, we'll get the NFIB Small Business Optimism Survey, and this, I think, does matter. We know that until today, optimism has been nowhere to be found. I don't think April's report will be so important because it is a little stale, but please note, when small businesses and other CEOs are not optimistic, they tend to put off big investments in product and in people, so keep an eye on this. Wednesday follows with the PPI, as I mentioned, another key input for the inflation trends. Then we get retail sales hit on Thursday, offering a look at the consumer resilience in this uncertain environment. Watch this one closely. Remember, the consumer keeps the United States economy going. Friday, we're going to get University of Michigan survey on inflation and sentiment. Again, keep an eye there. So we'll also hear from several Fed officials, including the Chair Powell, which could set the tone heading into June. In addition to the Fed Chair, we'll get Kugler, Waller, Jefferson, Daly, and Barr. So on the earnings front, we're going to get Walmart, Applied Materials, Cisco, and Take-Two Interactive. They're all going to report, giving us a cross-section of retail, chips, and consumer trends. The bottom line is that we're entering a stretch where the economic data could finally shift the Fed's thinking. Rate cuts are still expected later this year, but timing remains uncertain. Inflation, spending, and the Fed's response, they will set the tone. And for now, markets are holding their breath. As we start today, overnight, we heard a lot about the talks with China, another 90-day pause announcement. And like the last time, similar stories. The report early is that a lot was accomplished. By the time you see this, there should be more details. And I'll follow up if necessary with a special video on this. Both the US and Chinese sides are citing substantial progress. So as we saw with the UK, details were there, but the real work was still to be done. Once the market sniffed that out last time, it settled back down. We're going to see if that happens today. That's not what it's looking like right now. Add in the newest wild card. Also yesterday, the president announced that he intends to reduce prescription drug costs by 30 to 80%. Now, these announcements are often misunderstood. I just want to add one layer. When prices go down, that's great for consumers. And as 70% consumer-driven economy, that can't be bad. But also, it tends to lower the profits of companies. And a quick reminder, as you can see today from just two news items, both from the president, are totally changing markets and big pharma. This is indeed a time to have your goals clear and stick to a plan. Like weather in Chicago, if you don't like things, wait 5 minutes. It may just change. Now, going back to that, I do think that trade and inflation, even rate cuts, are part of the risk. I maintain that in order for this market to move substantially higher, valuations are the key. The real question is not, will the multiple be rich? In my opinion, the question, you have heard me say it often, is, are we entering an age where we redefine what a rich multiple is? The only way this market can move up significantly from here, again, in my opinion, is to say that 21 to 22 is no longer a rich multiple. This remains to be seen. So that's it for Monday's market update. As always, stay focused, stay grounded, and we'll see you back here next week. Have a great week.